Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. Happy Friday. These are the stories that set your agenda. The EU greenlights a €90 billion loan to Ukraine after marathon talks in Brussels, but it's backed by joint debt, not frozen Russian assets. The Bank of Japan hikes rates to a 30-year high. Japan's government bond yields rise to their highest since 1999. The yen, though, slides. Plus, stocks gain in Asia as the delayed US CPI report shows core inflation at a 4-year low. But with October's numbers missing, analysts cast some doubts on the data. So it was a strong session on Wall Street yesterday, with gains for around 1.5% for the Nasdaq 100, gains of close to 1% for the S&P 500, lifted by a benign inflation picture with all the caveats around that. And we'll unpack that story for you shortly. But also you had the stellar report coming through from Micron, and that lifted the tech space as well. It was also a decent session for European stocks, but today futures pointing a little lower by 0.3% on the European stocks 600, or 50 futures, I should say. Here in the UK, FTSE 100 futures pointing lower by about 32 points, down 0.3%. We had the rate cut, of course, coming through as expected from the Bank of England yesterday. S&P E-minis pointing lower, modestly so, by about 0.1%. Nasdaq 100 futures then stateside looking to add 26 points. Let's flip the board and have a look cross asset. So the inflation data, again, with all the caveats and the messiness around the numbers, did lead to more pricing of further rate cuts from the Fed into next year. More than 2 now priced in by traders. So we look at the benchmark 10-year currently at 4.13. Yields just up 1 basis point after the gains of yesterday. 1.33 on the pound, largely unchanged after the rate cut that came through, and caution in terms of the path ahead being signalled by BOE Governor Andrew Bailey. $59 a barrel on Brent, set for a second week of losses on oil, back below $60 a barrel and down 0.3 in the session today. And gold still holding above that 4,300 level, but a little softer in the session by 0.1%. Let's flip the board and have a look at the Asian session, where the focus has, of course, been on that fully expected Bank of Japan interest rate hike to 0.75%, but nonetheless the highest rates now in Japan for 3 decades. And you're seeing that move in terms of the yen, interestingly weaker on the back of that move by the BOJ, even as they signal further hikes to come if the data continues to align with their expectations. The yen then currently trading at 156, a little softer versus the US dollar, down by 0.3%. The Nikkei getting a bit of a lift, up 1.2% in the session so far. Over in Hong Kong, the HSI gaining 0.6%, and the read across is there for the benchmark in Asia, following the strength that we saw in Europe and Wall Street as well, up 0.6% so far across the Asian benchmark MSCI Asia Pacific. Let's get to what's happening then in terms of the support coming through for Ukraine from the EU. European Union leaders reaching that agreement then on a loan to Ukraine after marathon talks at a summit in Brussels. The EU will raise joint debt to loan Ukraine €90 billion for the next 2 years.
As a matter of urgency, we will provide a loan backed by the European Union budget. This will address the urgent financial needs of Ukraine. The Union reserves its right to make use of the immobilized asset to repay this loan. At the same time, we gave a mandate to the Commission to continue working on the reparation loan based on Russian immobilized assets.
OK, for more, let's bring in Bloomberg's chief Europe correspondent, Oliver Crook, who, of course, has been following all the details for us. Ollie, tell us exactly what was agreed and what the nature of this loan is, given that these frozen Russian assets are not now being used.
Yeah, Tom, that wasn't clear to you exactly on what the mechanism is there. I mean, so this is a very complicated solution by the European Union. Depending on who you ask, it's an intensely elegant solution to a very complex problem, or to another, it might be a very sort of elaborate can kicking to basically keep those Russian mobile assets immobilized, get the money to Ukraine from the European budget, and say that later on, if that loan will only be repaid if Russia repays Ukraine, and those Russian assets will be used in the stead. So that is effectively the mechanism that's in place here. Rather than seizing the Russian assets, making that decision today, it's keeping them under European control so that in the future, that when it comes time to actually repay that loan, the Russian assets can be used for that. So that is sort of deferring that decision to a large degree. It satisfies many of the concerns that the Belgians had throughout this process. And we should say that that 90 billion euro loan that is being backed by the European Union from the budget of the European Union, there are also some carve-outs there. It does not need to be backed by all of the member states. Hungary, Slovakia, the Czech Republic are all ones that objected to it. There was a unanimous vote on this, but those three countries, for example, will not be put on the hook to back that loan. So what this does in the short term, Tom, is it does get the financing needs to Ukraine as they need them. We know that they're basically running out of money in the first quarter of next year. This will bring that stopgap, but in some ways, it really kicks the can down the road in terms of figuring out what to do with those Russian assets. Because remember, Tom, there's no sort of reality in which many of these sort of political parties in Germany and France of the far right would sort of take on a debt burden to try to fund Ukraine. So this is the other thing that they're trying to balance there. Friedrich Merz and Emmanuel Macron, everyone seems fairly satisfied with this decision. That being said, it really leaves the sort of more difficult discussions to a later date.
OK, so still questions further down the line with the two-year deal, at least tying Ukraine over beyond that period of the first quarter next year, as you say, when financing would become particularly tight. The other big issue that you've been walking us through and giving us the detail and context on in the lead up to this meeting, Ollie, is the EU-Mercosur trade deal, a mammoth trade deal that's been, more than 2 decades in the making, but it's been delayed again. What's happened there?
Yeah, so 25 years in the making, and they're going to have to wait another 3 weeks or so. And I think Ursula von der Leyen sort of nodded to this in her press conference yesterday that, it's been 25 years, what's another 3 weeks? And effectively, the French and the Italians were not satisfied by the sort of safeguards that would be put in place for the farmers in case sort of pricing gets out of whack, imports get sort of flooded into the market. They want to have an emergency brake within the clause to make sure that they can pause the trade deal and sort of amend it going forward. And also, of course, there's the issue of, things like pesticides. They need to have the same rules that are applied on the goods that are coming into the EU as they impose on the farmers within the EU. And Tom, this is obviously a very emotive issue because the farmers were here in Brussels yesterday. The tractors were lining the roads of Brussels in protest to a number of things, including the Mercosur deal. But we heard from Emmanuel Macron at length. He was questioned at length about this in the doorstep, saying that basically, he needs to show two sides. One, that he's standing up for the French farmers, but on the other side, I think he does really want to see this deal get through, get over the line. Same thing with Giorgia Meloni. You'll remember that the president of Brazil said basically, you need to sign this deal by Saturday or it's not going to get signed in my mandate. He's walked that back a little bit after a conversation with Giorgia Meloni. So the new date to watch for, Tom, from what we understand, is January the 12th. That's when this trade deal could get put into place. And we should say it's very important for the Europeans. It's very important for Latin America. Why? Because everybody's trying to diversify away from the United States, but to do so intelligently so they don't have some of the same trading problems that they have had with other countries in the past.
OK, so another market, certainly for Oliver Crook's diary, January the 12th, as we look potentially to the signing of that deal. Bloomberg's chief Europe correspondent, Oliver Crook, thank you for that update. Let's get to Japan right now, because the yen has weakened after the BOJ raised rates to their highest level since 1995. Let's bring in Bloomberg's Japan economist Taro Kimura. Taro, get us up to speed then in terms of the market reaction to a move by the BOJ that all economists expected.
Right. As expected, the Bank of Japan hiked rates to 0.75% from 0.5%, though it looks low, but it's highest for Japan since 1995. Yen has weakened, probably because there was some speculation that the BOJ probably release their newest estimate on the neutral rates, which it didn't in today's release. So that provided some comfort to yen bears, and that's why the yen is reacting. Rates is picking up. The 10-year yields, I think it broke the 2% level for the first time in also 2006 or something. That's because, of course, BOJ hiked rates, but also probably the markets also see the BOJ's move slightly dovish. Because, I see the break-even inflation rates, the 10-year inflation expectations are picking up, and that's driving the long-term rates. So probably the markets are seeing, given the pro-stimulus political interference from the government, markets are questioning whether the Bank of Japan can temper inflation in the long term.
And meanwhile then, Taro, what are you and the team going to be watching for when it comes to the governor's press conference? Governor Kazou Ueda, of course, set to speak in a little under half an hour.
Exactly. So I don't think the yen bears are feeling relieved from the release from the Bank of Japan, because there's still a risk that the Ueda will signal something on higher neutral rates. And even in the statements, I see some signals that even though the Bank of Japan is hiking rates, it's calling the interest rates still significantly low. And that means, you know, the Bank of Japan is suggesting that their policy rate is still below neutral, and there's more space to hike going forward. And also in the statement, they clearly laid out some forces that drove them to hike rates, which is the easing U.S. tariff uncertainties, U.S. easing uncertainties also on U.S. economy, brisk wage growth and inflation. So those shows the Bank of Japan's posture that they're going to continue to hike rates. So including any off-the-cuff remarks from the Ueda, I think the market should be alert to each of what he says.
Okay, really interesting, a breakdown of the decision and what to look for then from the press conference. Taro Kimura, Bloomberg's chief, Japan economist. I just promoted him temporarily. Taro, thank you. Let's get to the broader picture across the Asian session then. Stocks in Asia gaining after the delayed US CPI report showed core inflation at a four-year low. But with October's data absent, because of the shutdown, of course, economists have warned of anomalies in the report. Despite that, the Chicago Fed President Austin Goolsbee said there was a lot to like.
We could get back on that golden path. Rates could come down. If we get stabilized full employment and we're on path to 2%, I would be comfortable with rates being a fair bit below where they are today. I just am uncomfortable front-loading the rate cuts before we're sure that we're actually back headed to 2%. This is a lot to like from this month's report, but we are going to want to see progress in services and progress in a couple of places on a sustained basis.
Well, let's bring in Bloomberg's Valerie Teitel right now, and it seems like that it's significant because Goolsbee, of course, was a dissenter. And wasn't ready to push rates lower. And now he's saying there's a lot to see, there's a lot to like in an inflation report that's been described as Swiss cheese by some economists.
No, I think it was interesting to hear from Goolsbee that he did take away some conclusion from the report yesterday. I think there was a healthy dose of skepticism about this report, if even any Fed official could say anything with clarity after yesterday's data. But look, the market definitely took the direction of the data seriously. The fact that it came in soft, we saw the equity market really rebound from Wednesday's weak session. The Nasdaq basically scraped back nearly all its losses from Wednesday. And we did see two-year yields drop. They did drop by just 2 basis points. But, Tom, it's been fairly range-bound in the Treasury market last few months, and we're at the bottom end of that range now. So very close to a breakout. So the market did take at least the direction of the report seriously.
Talk us about the debate around the data then, because it was the government shutdown and the effect of it. October data wasn't able to be collected. What do we know about just how messy this report was?
Well, look, the debate is still raging on Twitter, Tom, if you did want to get involved about statistical data calculation. There is still a lot to be said. That
is usually my favorite Friday activity.
Yes. There was a few surprising factors in this report, one of which analysts have been heavily debating in the last 18 hours is a huge fall in housing inflation. We actually saw Omar Sharif from Inflation Insights say that the fact that they essentially assumed that rental inflation for October was zero is a thing that is totally inexcusable. And he actually followed that up with that someone should be fired today from the BLS. So essentially, they assumed that one of the biggest components of core CPI was zero for the month of October. Now, that's shelter inflation, housing inflation. We've heard a lot about this debate. Fed Governor Stephen Miron, that's one of its main basis for why he thinks that inflation is going to return to target next year, because we're going to see a slowdown in housing services inflation. But there was also other questions. We saw a big drop in apparel. Many people thinking that was because that the survey period for CPI was 1 week closer to Thanksgiving, 1 week closer to Black Friday, and perhaps captured some heavy discounting going on. So still a lot to be debated, but at least from Fed officials, mentioning that this is a good sign. We do hear from New York Fed John Williams later today. He will be speaking at 1:30 p.m.
Okay.
Given he's a centrist, if he has any conclusions to make from this report, I think that'd be a good thing for the equity market.
Okay,
for the
so
Treasury
we'll
market.
listen to that commentary and all the caveats, of course, around that data set. Valerie Totel, thank you very much indeed. Coming up, UK startup Fuse Energy announcing its latest fundraise as it aims to make energy cheaper and more abundant. I'm going to be speaking with their CEO and co-founder next. The company valued a little over $5 billion. That's coming up. This is Bloomberg. Welcome back. Now, Fuse Energy has raised $70 million in funding, boosting its valuation to $5 billion. The London-based energy startup aims to provide lower-cost energy to consumers and develop its own renewable energy assets. Quantum Light, Revolut founder Nick Storonsky's venture capital firm, is a new investor in the business, also backed by Balderton, amongst others. I'm joined now by Alan Chang, CEO and co-founder of Fuse Energy. Alan, formerly one of the first employees at Revolut as well. Alan, thanks so much for coming in and talking to us about the raise. What do you plan to do with the capital that you've raised? $70 million, how are you going to be deploying that?
Yeah, so for the first 2 years, we've been very focused in the UK. With the new funding, we'll be focused on expanding to US, Ireland, Spain, and deep into continental Europe as well.
Is that a 2026 story? Is the US a 2026 story for you?
Yes, that's correct.
Okay, how significant is that market potentially for Fuse?
I mean, the goal for Fuse is to become the #1 energy company in the world, so it's hard to do that without going to the US.
That is quite the ambition. What sets you apart from any other energy companies then?
Yeah, so our key focus is full integration and lower the true costs per kilowatt hour. So we do anything from building a utility scale power generation all from scratch, all the way to energy retail and everything in between. So we're able to, for example, we just finished one of the solar parks a couple months ago, and we're able to lower the cost per kilowatt hour 30% below market, and that allows us to serve more customers at a lower cost per kilowatt hour.
Because you have the full stack.
Correct.
What stops your competitors copying what you guys do?
Reality is nothing. Anyone can build this. But they have, incumbents have been around for a very, very long time, and they haven't done. If they wanted to do it, they would have done it.
Okay, and talk to us about customer acquisition, because it's been pretty rapid. Give us the latest numbers in terms of customer acquisition and the kind of growth you're projecting for next year.
Yeah, so we've projected to grow roughly 10x this year.
Wow.
And the plan for next year is to grow another 4x. But internally, we're shooting for 10x.
Okay, you're shooting for 10x again in 2026?
Yes.
And you expect to achieve that this year?
Yes, that's correct.
Okay, 10 times the growth. What are the biggest constraints right now?
Biggest constraints is talented engineers. Ultimately, we are not capital constrained. Last month, we actually, we were actually cash flow positive for the first time ever. So it's really about hiring really talented engineers, and so we can go to more markets and build more products.
How do you work through grid capacity? Because that is famously constrained as well.
Yeah, so we have in-house team of developers that partner with the grid and work with landowners to develop sites. But yeah, you're not wrong. Like it is very constrained. So that's why we have a very, very big pipeline, over 1 gigawatt, going all the way to 2035, with projects coming online every single year.
And famously, there have been startups in the energy space that have collapsed. I'm thinking of Bulb Energy in recent years. Significant price swings around the energy story, part of that linked, of course, to geopolitics and Ukraine. What stress tests have you done across the business for those kind of price swings?
Yeah, so we stress test internally market prices every single month. So we do take the worst case scenario and we basically plan for that, both from a liquidity perspective and capital perspective. Okay.
When it comes to the question of AI and the build out of the data center story, and you're looking to build in the US, that's a key market for you, clearly. Yep. How much are you factoring in? What are you modeling in terms of the potential impact of data centers on energy use in the years ahead?
Yeah, honestly, like your guess is as good as mine, but what we do know is it could be anywhere from a few percentage points to over 100% increase in demand in the next 10, 20 years. So one thing for sure is there is not enough energy to go around, and it's our job to make sure we build more.
What do you think by the end of 2026, looking into 2027, what is the potential US growth story for you?
I mean, like for us, we want to be a key leader in energy in the US as well. So we plan to go to Texas, set up Texas first as a first market.
Yeah.
But ultimately, in 5-10 years' time, we expect US to be half our business.
And it's renewable energy. The focus is on renewable energy, but you also use gas as well. Is that right?
Yeah, our focus is low-cost energy,
Okay.
and it just so happens renewable is very, very low cost.
What about being full stack requires a significant capex, presumably, because you have the full stack. It involves significant investments in the actual generators of energy. Is that going to be a constraint for you longer term?
No, actually, there's actually a lot of abundance in capital on project financing, on renewable infrastructure. So actually, that's not a constraint for us.
How is it to operate a business like this in the UK at this point?
I would say it has its challenges, obviously, right?
What are the biggest challenges?
Well, I'll say the biggest challenges is, I think as identified the planning grid, right?
Yeah.
If the government can do a lot to basically remove the red tape, and things would go much faster.
So, Keith, if you were to ask for the government for one change that could help your business and your sector, what would it be?
Deregulate planning and deregulate planning.
Deregulate planning.
Yeah.
Okay, Alan, thank you very much indeed. $17 million raise, big ambitions for the company globally, and the US market clearly central as well with a $5 billion valuation. Alan Chang, CEO and co-founder of Fuse Energy. Coming up, we're going to switch focus to the retailers with Nike in focus. Shares there sinking on weak sales in China. The CEO says the recovery will not be a straight line. More on that to come. This is Bloomberg. Now, the suspect in last weekend's shooting at Brown University has been found dead after taking his own life. Authorities had also linked the suspect to the murder of an MIT professor 2 days after the university shooting. 2 people were killed in the attack last Saturday and 9 were wounded. Australia will start a gun buyback of surplus, newly banned and illegal firearms after terrorists killed 15 people in a Hanukkah attack at Bondi Beach. The effort will be the biggest such program since the government's buyback in the aftermath of the 1996 Port Arthur massacre, a landmark moment of public safety policy to regulate guns used in mass shootings. And TikTok says it has signed deals to create a US joint venture majority owned by American investors. An internal memo seen by Bloomberg from CEO Shou Chu tells employees that agreements have been made with Oracle, Silver Lake and MGX. Oracle shares jumped in after-hours trading on the news. The new venture will operate as an independent entity that will control data protection, content moderation and algorithm security in the US. Chinese regulators have yet to say whether they will approve the deal. And federal workers in the US have been given an early Christmas present in the form of a 3-day holiday. That's after the US president signed an executive order making Christmas Eve and December the 26th federal holidays for the first time. But the New York Stock Exchange and Nasdaq say their hours on those days will remain unchanged, with the stock market closing early at 1 p.m. on the 24th, while December the 26th will be a full trading day. Coming up, the BOJ governor is due to speak after the central bank hiked rates to their highest in 30 years. Stay with us for that. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. The EU greenlights a €90 billion loan to Ukraine after marathon talks in Brussels, but it's backed by joint debt, not frozen Russian assets. The Bank of Japan hikes rates to a 30-year high. Japan's government bond yields rise to their highest since 1999, while the yen slides. Plus, stocks gain in Asia as the delayed US CPI report shows core inflation at a 4-year low. But with October's numbers missing, analysts cast doubt on the data. Let's get to the markets then. A solid session on Wall Street. Yes, there was all the context and question marks around the inflation data, of course, of the US. But nonetheless, you saw a strong session with the Nasdaq up around 1.5% and the S&P gaining around 0.8%. Today, European futures, after a decent session, again, for European stocks yesterday, gains of 0.9%. Today, a bit of profit taking, 50 futures pointing lower by 0.2%. Here in the UK, FTSE 100 futures down by 32 points after that rate cut by the BOE. S&P E-minis currently flat. Nasdaq 100 futures looking to add about 0.1%. Let's flip the board and have a look cross-asset then. A focus on the US 10-year yields, marginally higher today after a modest gain yesterday on the back of the inflation data. 4.13 right now in the US benchmark 10-year. Traders pricing in at least 2 cuts from the Fed in 2026. The pound at 133, largely unchanged after yesterday's rate cut, and Andrew Bailey suggesting caution ahead in terms of further moves lower. $59 a barrel on Brent, set for a second week of losses on oil, down 0.2, and gold holding above 4,300, but a little softer in the session by 0.1%. Let's bring you live pictures right now of Tokyo, where Governor Ueda of the BOJ, as you can see, is seated and is commenting following that decision to raise interest rates to 0.75%, the highest level then since 1995. And the BOJ in its statement as well saying that if the data lines up with their forecasts, there are further hikes to come. Japan's economy is recovering moderately, says the BOJ's Governor Ueda. Japan's economy is recovering moderately. Ueda saying that wage hikes are likely to be solid next year. That, of course, is consequential in terms of how the BOJ thinks about further rate hikes. You see these wage negotiations and the moves higher in inflation. 3% is what the CPI data came out with earlier on Friday, 3% in the month of November. That is 44 months now above that 2% target for the BOJ. Wage hikes are likely to be solid next year, says the BOJ governor. We can get more context and bring in Valerie Teitel as we continue to watch these lines from the head of the Bank of Japan. What stands out to you in terms of what to think about? There's a little bit of uncertainty. There's this mismatch in terms of yields higher, Val, and yet the yen weaker. Some in the markets questioning just how far this BOJ can go. Some expecting, in terms of the people we've been speaking to, analysts and economists, maybe at a 6-month pace you get further interest rate hikes. But in the context, of course, of a new government and a new prime minister that is focused on fiscal stimulus.
Well, look, as we're watching Ueda speaking, the real things we're looking for is a signal on timing. What do they think about the next rate hike? Is it going to be at a 6-month pace, or will he in some way imply some more urgency to normalize policy? The way he could do that is by talking about the neutral rate. If he does see the neutral rate as something higher, maybe that's implying they have more to go in this hiking cycle, maybe implying that they want to hike a bit more than expected next year. We're also looking out for any hints on their ETF holdings. Will they start to wind those down in January? It was something that Bloomberg did report a few weeks ago. But you're right to tie in the political angle here. Takaichi's government is on the verge of passing the biggest budget in Japan's history. So fiscal spending, fiscal stimulus is really going to be a big part of Japanese economic growth next year. And she's doing that alongside, dollar yen being at 156. The yen is at the weakest levels of the year. And in some ways, she doesn't want to import inflation at the same time she's juicing the economy. So a way to do that is to strengthen the yen, hike rates a bit more than the market expects. But given the yen and sticky prices, I do think the political angle here is that Takaichi is willing to allow some tightening. It's just down to Ueda, perhaps in this morning's press conference, to tell the market just how much that could be.
Ueda saying that they will be raising rates if the economic outlook is met. So that's matching what we heard from the statement. Accommodative conditions will support the economy firmly. And again, we have had the interpretation that he's not going to want to go too much against the grain, to your point, of the new government and Prime Minister Takaichi. So accommodative conditions to support the economy firmly. That comes back to your point as to what the neutral rate is in terms of what their agreement is. Is it 1%, 125, 150 even? The likelihood is rising for the outlook to be realised. Governor Ueda is saying the likelihood is rising for the outlook to be realised. Wage price cycle is likely to be maintained. And of course, if that is maintained, it does arguably give them room to go further on those rate hikes. Again, Bloomberg and its assessment of BOJ watchers most expect further rates, but at a 6-month cadence.
One thing to note here is that despite the Bank of Japan's really cautious preparation for a hike, he is noting that the uncertainties over the U.S. economy, tariffs, have receded. That was a big part of why the Bank of Japan was cautious earlier this year. I'm interested to see if he says anything about asset prices, including real estate. Those have really risen in the last, or climbed sharply, should I say, in the last few months. And there are obviously lessons tied to the late 1980s, the massive housing bubble that burst in Japan. Maybe they're becoming more concerned about the rise in asset prices, but nothing yet from Takaichi on those two topics. He is noting, though, that uncertainties over the U.S. economy and tariffs have receded, and that was a big reason on why they were so cautious earlier this year.
Val, briefly, in terms of the broader global market impact of this, as we think about the rate differential closing now between the BOJ and the Fed, how do we think about things like the carry trade and money flows in and out of Japanese assets?
Well, look, that's a big point to bring up. You know, because Japanese fixed income has been trading at such a low yield level for such a long time, and there's low volatility, at least aside from this year, it has been used as a funder. Essentially, you sell Japanese yen, essentially paying those low rates in order to fund another trade. Now, that kind of trade has really kind of been ripped up amid the volatility in Japanese fixed income this year. But it is a key question on what the market will use as a funding currency next year. I mean, it could be even the euro, because there is a low volatility expected, at least across European fixed income, with the ECB moderately staying on hold for the most of next year. But I don't necessarily see the carry trade being disrupted by anything Ueda is saying at the moment in this press conference.
OK, Val, thank you very much indeed. Markets reporter Valerie Teitel. And we keep across, of course, the lines from the BOJ governor, from one governor of the central bank to another governor of a central bank, and this time the BOE, warning Andrew Bailey of limited room to lower interest rates further. Different direction of travel, of course, for the Bank of England versus the BOJ. Andrew Bailey was speaking after the UK central bank voted 5-4 to cut rates to a near 3-year low. Bailey said the MPC will face a closer call on its decisions next year.
Well, I've been very encouraged by the progress that we've made on inflation. I've been saying for some time that we had this, what we called hump up this year. I thought it was going to come down, and it has. And the good news is it's actually coming down a bit faster than I think we thought it would. I'm particularly pleased because there's been an easing of food price inflation, which is really very important. I mean, all inflation is important, but we know that food is salient. It's very salient, and of course it hits those on lower incomes a lot as well. I think now that we're on a path where we'll probably be around this level for a few months, but we think that come the spring, April, May time, we should see another quite sharp drop and take us, I hope, to around target. So we're going to come back to target sooner than we thought. So that's encouraging. All of this is very encouraging. And for me, certainly, it was a strong basis to cut today. It's the 6th cut we've made. Now, looking forwards, I do think we'll continue to have something of a gradual downward path. We'll have to judge the evidence, as you know, at every meeting. We'll come back for the meeting at the end of January, early February, and do that. The calls do get closer, but because as we come down, we will approach a level which is going to sort of, in a sense, maintain inflation. It's not going to be too hot or too cold, if you like to borrow that phraseology. It's very hard to know exactly where that level is, but we will approach it. We're approaching that level. We must be approaching that level in a sense mathematically. So the calls will become closer, and I would expect the pace of cuts therefore to ease off at some point. But I'm not going to judge exactly when that is because it's too uncertain at the moment.
the Bank of England Governor, Andrew Bailey, who, according to the Press Association, is speaking to BBC Radio right now. The Governor saying that the UK should be prepared for AI job displacement. That line coming through. Press Association reporting on a conversation between Andrew Bailey and the BBC. We'll keep across any additional lines, of course, from the Governor of the Bank of England if and when they come. Meanwhile, Bloomberg understands that the ECB and officials there believe the rate-cutting cycle is probably over, given the latest outlooks for growth and inflation. The bank held rates steady, with President Christine Lagarde saying the euro area economy is resilient.
We reconfirmed that we are in a good place, which does not mean that we are static. There was a unanimous decision that was taken today concerning the rates that we decided to hold. But there was also a unanimous view that all optionalities should remain on the table.
Coming up, oil heads for its biggest annual drop since the pandemic as tankers sit idle with nowhere to offload their crude. We bring you that story next. This is Bloomberg. Welcome back. Let's get you up to speed on the latest lines coming through from the Bank of Japan Governor Ueda. Of course, you're seeing a further move lower in Japanese yen versus US dollar as Ueda says that we need to view the neutral rate as having a broad range. Also, on terms of rates being the highest level in 30 years, no special meaning to have rates at the highest level in 30 years, according to the governor. We will make comprehensive assessments on the degree of easing. But it's the lines on the neutral rate that I think the markets are latching onto. There is a continuing debate, of course, as to what the neutral rate is for Japan. So rates increased today from 0.5% to 0.75%. Expectations for most Bank of Japan watchers that Bloomberg's been talking to that you'll get further rate increases at a 6-month cadence. But, of course, Governor Ueda has been stressing that is dependent on, of course, their forecasts and the data coming in line. He does expect that to happen, of course. Difficult to determine the neutral rate ahead of time, according to the governor. The Japanese yen, just briefly checking in on the price action, 156 now. So again, weakening modestly, down 0.5%, weakening a little further on the back of these comments from the Bank of Japan governor. Now, to the commodity space, and oil is on track for its biggest annual decline since the pandemic as a glut of supply stalks the market. Tankers filled with oil are idling on the world's seas, waiting for the market to pick up. For more, let's bring in Bloomberg's Anthony De Paola. Anthony, what is driving this surge in supply then?
Hey, Tom, good morning. Yeah, exactly. As you say, there's a lot of oil in the market, and that's because there's been so much additional production from other countries, particularly outside of the OPEC Plus group of main producers. There's Guyana in the Americas that has added new fields and brought new oil onto the market that wasn't there before. They're a new producer. The United States, a huge producer, pumping out huge amounts of crude. Of course, we are talking a lot about whether some of those producers, particularly in the shale patch, can continue to produce at these kind of lower prices. But we're just seeing kind of the incremental barrels being shaved off the top there. But there is still a massive amount of production and production growth. In some cases, not as much as was forecast. But we are seeing that oil coming into the market and outpacing the growth in demand. Top-line oil demand growth is still growing every year. We are seeing records, so that is still ticking up, but a little bit slower than some people would expect. And again, a little bit slower than that additional supply coming to the market. So we are seeing some buildup in crude supplies on vessels in storage, and that's bearish for markets. So a lot of people are looking at that glut really materialize and getting into the market and bringing prices even lower next year than they are now. So we're already below 60, which is kind of a threshold for Brent. We haven't been below 60 for this long a time for a while. And now some of the market participants that we've spoken with are looking at prices even down closer to the $50 barrel mark next year as we go in and as we deal with that glut and those extra barrels coming to market, Tom.
Okay, how far we get towards that $50 a barrel level. As you say, 59.68 right now on Brent, down 0.2% and set for a second straight week of losses. And arguably then, with that context, further pressure on oil into 2026. Bloomberg's Anthony DePaola with the details on the Bloomberg Big Take, of course, which you can find on Bloomberg.com and on the terminal. Anthony, thank you. Let's get to one of the biggest retailers, of course, in the sportswear division, Nike, coming through with details yesterday. The world's largest sportswear company saw its shares falling more than 10% in aftermarket trading after the company warned of a decline in sales and a weakening market in China. Bloomberg's business reporter Jennifer Creary joins me now with the details. So Jennifer, Nike's been in under pressure all year, and now there's kind of further underscoring the challenge there, particularly when it comes to the Chinese market. What is going wrong for Nike?
I mean, the problem here is the pace of change, and you're really seeing investors disappointed in how fast the turnaround is happening. So there are really two persistent sore points here that we saw from yesterday's results. So the first being Converse, the iconic brand. Sales are down 30%. For a long time, the company has relied on sales of its iconic Chuck Taylor sneakers, but unfortunately, consumers are just not as interested in the sneaker as they were before. The other sore point is Greater China sales. So that's down 17%. And that's because Nike has really struggled to sell off a lot of its excess old inventory and really innovate fast enough to capture the attention of an increasingly picky Chinese consumer. So it's not all bad. Some other regions are growing. So North America is growing and it's showing some progress in its running category, but it's simply not fast enough to really buoy investor confidence.
So where does the company, given the challenges, particularly when it comes to Converse and the Chinese market, where does Nike go from here?
Well, really, it needs to boost in-store traffic and sell off that excess inventory, and more importantly, create products that capture the consumer zeitgeist. So on the analyst call, CEO Elliott Hill did say that the recovery won't be a straight line. We're acting decisively to accelerate the lagging areas, with China at the top of that list. So they know what the problem areas are, and Nike said it will focus on Tier 1 cities in China, like Beijing and Shanghai. So it's moving forward with that change, but it's simply not fast enough. Products take about 18 months to 2 years to really feed through, so it's going to take a while. One thing that I think is important to mention is that Nike hasn't given full-year guidance for a while now. It's only been given guidance for the following quarter. And one thing that will buoy investor confidence is when they start issuing longer-term guidance. That will give them confidence that the recovery is underway.
Okay, that's interesting. So that's an important metric to watch if indeed they come through with that forward-year guidance for the full year rather than just the quarter. Jennifer, thank you very much indeed. The update coming through from Nike and some of their investors losing patience in terms of the potential turnaround there, with pressure, of course, on the Converse brand and the Chinese market. Jennifer Creary, our business reporter. Now, some other stories making the news this Friday. New survey suggests Britons are more likely to spend and buy big-ticket items than they were before the government's budget. GfK's indicator of major purchase intentions rose to -11 in December. That's up 4 points from November and the highest score in almost 4 years. GfK's overall consumer confidence index rose to -17, matching the highest reading this year. A career diplomat has been named as the new UK ambassador to the US. Christian Turner is a former High Commissioner to Pakistan and had been due to begin a new post as the UK's ambassador to the UN. He replaces Peter Mandelson, who was sacked, of course, after emails obtained by Bloomberg revealed more details about his relationship with the paedophile sex trafficker Jeffrey Epstein. Some local elections due to take place in England next year may be delayed in a move that could limit the losses faced by Prime Minister Keir Starmer's governing Labour Party. 63 councils have been told they can choose to put elections on hold for a year as part of efforts to streamline local government reforms. The elections due in May are seen as a pivotal moment for Starmer's future. Switching gears now, BlackStone's annual holiday video is back, and this year the firm's 40th birthday sparks an over-the-top midlife crisis.
Turning 40, it's a really big deal.
Did you get a nose ring?
I've always had this.
Some of us are in denial that we've become a mature organization.
Hey, guys, let's start buying sports teams.
Well paid.
We could buy Ferraris.
No, let's buy Ferrari.
Yes! Yeah, we're definitely having a midlife crisis. Wait, are we rolling?
Even Steve's going through it.
Well, I was thinking of becoming a DJ.
Steve Schwarzman, a DJ? He'd crush.
Okay, there you have it, the BlackStone annual video. You can watch more of that, of course, on Bloomberg.com. And getting us into, of course, the seasonal spirits and the festive spirits. There's a lot more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So, the BOJ hiking rates to the highest level since 1995. Governor Ueda continues to speak, of course. Recapping some of the lines for you as we see further weakness for the Japanese yen, now at 156 versus the US dollar. Governor Ueda saying it's difficult to determine the neutral rate ahead of time. Of course, they've raised rates from 0.5 to 0.75%. The BOJ's governor, of course, saying there is some distance from the lower end of the neutral rate, also saying that rate hikes haven't had a strong tightening effect. And again, the BOJ in its statement saying they do expect further hikes if their forecasts, of course, come to fruition. And we saw inflation data out of Japan prior to this decision from the BOJ earlier today, coming in at 3% for the month of November. That is the 44th month where you've had inflation above the BOJ's 2% target. We'll keep across this story for you, of course, globally significant as well, as we see that divergence between US rates and Japanese rates being squeezed as, of course, Fed rates come down and Japanese rates go up. Let's flip the board and have a look at what's happening in the inflation story out of the US then, talking of that rate differential. And expectations, interestingly, from Bloomberg Economics, that you could get 100 basis points of cuts in 2026. The inflation data, yes, yesterday was mixed and murky, given, of course, the government shutdown and the inability to collect data over October. The month of November, 2.6% was the core increase in terms of CPI. There were different reactions to this, of course, but you did see a bit of a move in terms of US Treasuries, yields down. You did see some increase in the bets around how far the Fed can get, given that, at least on the surface, this was a benign print. But again, with all the caveats around how muddy that inflation picture was. And again, BE, Bloomberg Economics, expecting that the chances of a rate cut, another cut in January, have increased as a result of that inflation data. Let's flip the board and have a look at the data print out of the UK, because the one to watch is retail sales. That's coming up in the next couple of minutes. The opening trade team will break that for you. In the context, of course, of lower growth in the UK, lower inflation and higher unemployment, retail sales important in the context of kind of building out the picture for you. As the governor of the Bank of England yesterday saying, we will likely move further lower, but really raising questions as to how far they can go, and the decisions becoming more challenging going forward. The rates moved lower by 25 basis points, of course, as expected yesterday at the Bank of England. Now, earlier, when we reported on UK consumer confidence, the graphic attributed it to GSK instead of GFK. We do apologise. Should, of course, been GFK. Coming up, I'm going to be speaking with a lovable CEO and co-founder, Anton Osika, after the company reportedly raised more than $300 million in new funding. That exclusive interview coming up. The opening trade is next. This is Bloomberg.